Ya tenemos conexión con Londres. Dean Turner, Chief Eurozone and UK Economist at UBS Global Wealth Management and Chief Investment Office. Good morning, Dean.
Good morning.
What's your vision about these global markets now?
So in terms of the global markets, we still remain relatively constructive on the outlook. We think that equity markets still can trade higher as we go through this year. What will clearly be behind that is the reopening and the recovery of the global economy, which we expect to provide a pretty supportive backdrop for corporate earnings.
And International Monetary Fund improved the forecast yesterday to Europe and United States, but Spain is in the top of this improvement. How do you see Spain and Europe economy?
So in terms of the outlook this year, clearly the developments that we've seen with the third wave of the virus has meant that we've tempered our expectations for this year just a little bit. But I would say this is more a story of recovery delayed by 1 to 2 months. We're still relatively constructive that we can see some pretty strong growth across the Eurozone this year. For the Eurozone as a whole, we're expecting an expansion of around 4%, so pretty similar to what the IMF have suggested. But looking into next year, we're actually a little bit more optimistic, expecting to see growth of around 5.3%. The numbers for Spain in particular, just a little bit higher than that. It's important to understand that for economies like Spain, because they had a much bigger contraction, the rebound we're expecting will be a little bit faster. But just one other thing I would highlight with the messaging from the IMF yesterday was this story of divergence. This is something that we're going to have to watch in the Eurozone as well, because they're in the initial stage of the recovery, there probably is going to be a little bit of divergence. But looking 2 to 3 years out, we share the view that most of the output lost will be regained.
At the top of this forecast is United States, Spain, but not Europe. Mm-hmm. What do you think that is better for investors now, Europe or United States?
So at the moment, we've got both markets ranked as equal weighting within our portfolios. I mean, the economic story is clearly a little bit ahead in the United States for a number of reasons, due to vaccines or also due to lockdowns. But we've also got to be aware of the fact that equity markets have recovered quite strongly there. Some of the more interesting ideas in equity markets, in our view, are not so much on the regional differences between the developed markets. It's much more looking at some of the areas of the equity market that haven't yet participated in this rally. So we got a bit of a focus on some of those left behind sectors, and that would point us in the value for point us in the direction of looking for stocks that offer good value at this moment.
And in the comparison between UK and Europe, what do you prefer?
Again, in terms of equity market preferences, we're pretty much in line. Again, there is nuances with the economic story, but a lot of that is already priced into the outlook. I think one area where I'm probably a little bit more constructive on the UK relative to the Eurozone, is in the currency space. In my mind, I still think sterling probably looks like a little bit of an undervalued currency and can probably rise a little bit against the euro as we go through this year. So, much more focus on the currency markets rather than equity markets right now.
Federal Reserve have seen the inflation yesterday at 12%. Europe have the same terms. There are a problem with this type of inflation in 2%?
I don't think so. I think what we're seeing or likely to see over the coming months is inflation being driven higher by a number of base effects. Base effects such as the oil price. If we think back to this time last year, the the price of a barrel of crude oil was trading below $20. Today it's above $60. Those kind of effects will push up on inflation. Is it going to be enough to make policymakers at the ECB or the Federal Reserve, for that matter, change their policy stance? I don't think so. This is temporary inflation. As we move into next year, these effects that we're seeing will start to fade, and that's ultimately going to be the focus point.
Where do you see at UES the recovery? 2021, 2022, 2023, what are the point?
So in terms of in terms of the global economy and most developed markets getting back to their pre-pandemic levels, I think that that's more than likely going to happen by the end of this year. A more interesting measure in my mind is when do we get back to kind of pre-pandemic trend? So also make up for that that output that was lost due to some of the effects of the coronavirus. I think that probably takes a little bit longer. We're probably looking at a story there for mid to late 2022. But pretty much as the IMF highlighted yesterday, in the developed markets, because of the very strong fiscal response, and we shouldn't underestimate Europe in all of this, especially with the EU Recovery Fund due to come online later this year. The strong fiscal and monetary response we have seen will mean that developed market economies can make up all of that output a lot sooner than what we saw during the last recession.
Dean Turner, thanks for having this time with us. Good day, good business.
Thank you. Good day.